right, welcome back. We've got a busy stock market update today. A lot going down this week. We had a lot of economic data. We had a lot of market volatility. We had the Federal Reserve. We've got this little dog here who's super anxious. I'm going to put her down and we'll get to it. So this week we did have the FOMC, and the Federal Reserve did do a 25 basis point cut. And the market did not like what Jerome Powell had to say, and they did not like the Fed's future rate projections. So they did lower their projections for next year of future rate cuts. The expectations for only 2 additional rate cuts in 2025. And Jerome Powell did say that they see inflation being a little bit higher than they are wanting it. Not higher, but the speed of which it's getting to 2% is slower than what they were anticipating. And the need for cuts is not as drastic as once seen before. So really saying the same stuff that he's been saying forever, and saying that he's data dependent. If the data shows that we need to pause one meeting, we'll pause. If the data shows that the labor market is weak, we'll cut. Right now, they're seeing the labor market being okay and inflation not getting to where they exactly want. So that's why they're saying instead of cutting 4 times next year, maybe we only cut twice. So that could change tomorrow if we have a bad jobs number. That could change to no cuts if we have hotter inflation. So they're saying the same stuff that they've said for the last couple of years. They're data dependent and they're in wait and see mode. But that did cause one of the worst days this year in the market. So you had the NASDAQ on Thursday was down big. The S&P was down big on Thursday, and we're seeing a little bit of a bounce back today. Let's go ahead and take a quick peek at the heat map for this week. A lot of red across the board, which is kind of funny because at the beginning of the week I put out a short update saying how we're in a little bit of euphoric times where things are getting a little crazy, especially in certain stocks. And Tesla ended up being flat on the week, but it was up pretty big and gave back some of those gains. So we can see here Tesla's down 67 bucks from its high point of the week, but ended up being flat, so gave up all the gains from Monday. Let's go ahead and take a look at the market. Take a look here at the NASDAQ first. Again, pretty good size pullback, but we're still in this nice little uptrend. This could be a blip in the road or the start of a larger correction. We'll see. To me, it kind of looks like the market knee-jerk reaction overreacted, and I think we'll probably get a little Santa Claus rally, and maybe at the beginning of 25 we see a 10 to 20% correction. Who knows? Nobody knows. The S&P, same looking deal here. We're still in this uptrend, and we just had a nice little sell-off, and it looks like that sell-off was bought up a little bit today. The Dow Jones has been red, had one of the longest red streaks in a long time. It was like 8 days or so of red, and then it had one green day and then one big red day. But again, the trend is still intact here, looking fine. The Russell 2000, really big drop, but still the trend is up and away. We haven't seen a market structure shift to where we are making lower lows. We're still making higher lows. So that's all good stuff to see. Gold did have a big move this week as well. I need to clean up this chart. And there's a lot of blood in the streets for the crypto market as well. So we will see if we get a weekend recovery, or again, if this is the beginning of a little bit larger sell-off, which would still be relatively healthy to see. So it seems like there's a lot of carnage in something like Bitcoin, but if you zoom out, we're still really not much going down here. Just one little blip on the radar. Now, if we see a few weeks like this, then it's like, okay, that's going to be a lot of pain. Oil doing nothing. Um, let's take a look here. Nvidia, really not a whole lot going on this week. It was red, got bought up towards the end of the week. Let's take a look at Google. Same thing. So when we look at the heat map again, there are some big losers on the week, but it's just a little bit of money off the top across the board. Apple's up, Broadcom's still up on the week, which is kind of interesting. So Palantir still up 10% on the week. That's kind of interesting as well. And there was a lot of economic data, so we'll take a look if there's anything else, because there was a lot this week. We had retail sales, a little better than expected. We had the FOMC. We had the unemployment claims, came in a little better than expected. We had the PCE, which is the Fed's preferred inflation metric, that came in a little cooler than expected. Yeah, 0.1 of expected 0.2. So that's good, I guess. So let's see. Next week, going to be super light these next couple weeks. We do have some unemployment claims on Thursday, but we've got Christmas on Wednesday, so the markets will be closed. And then the following week is New Year's, so it's going to be another not a lot going on these next couple of weeks. Going to be a lot of thin trading out there. Now let's take a look. Any other news? Really wasn't much else. It was all lead up to the Fed. The unemployment, we already talked about. Tesla. Okay, so a lot going on here, a lot of volatility with the Federal Reserve. Speaking of volatility, let's pull up that chart because we did see a big spike in the VIX. Where are we at? Oh, yes, we'll leave with talking about the VIX and the dollar. So volatility, big spike, and we're retracing that spike here. So that's good to see that we are returning back down. The other big mover we had was the dollar. Dollar making a huge move up here. And then also we're seeing the interest rates go back up. So to me, this is so funny. The Fed is cutting the interest rate, but the yields keep going up. So even on the short-term yields, we are seeing them not drop as much as they should because the Fed is cutting rates, but yields keep going up. So this is normalizing. The longer-term rates should be higher than short-term rates. So it's good to see this normalize. But there's just not a huge demand for these longer duration bonds, and that's what's causing the yields to go up. And that also, that initial shock we had on Thursday of just a huge move up on interest rates, that is also putting pressure on the stock market. So when we had this big move here in the long duration interest rates, that is causing some of these stocks to sell off. There's a lot of interesting stocks out there, like some of these. I'm just going to bring up Vale. Vale is a Brazilian metals company. They're known to have a high dividend. There's a lot of dividend companies that are really getting under a lot of pressure, their stock price, because people are selling those and just locking up bonds, buying bonds. Because there's still business risk in these dividend stocks. So why get 6% from a dividend stock when you can get 4.5% or 5% from a bond, where there's really not a lot of risk other than the government collapsing, which is much more likely that a business collapse versus the United States government. So that is interesting. There could be a play there. Some things like REITs are really getting smacked. Like Vici, for example. Look at that, just falling off a cliff. I don't think anything fundamentally has changed with the business other than rates are rising, so their cost to borrow, they're not as competitive compared to bonds. Another REIT that I like is Realty Income Corp. Same thing here. So that to me is interesting. There could be a play there if you're looking for some more safe dividend style plays. Another stock I was looking at was Occidental Petroleum. I don't think I have that on this list. But there's a couple stocks like that out there where they're more of like the Warren Buffett type of investments. They're not going to grow 20%, 30%, but they may be a little bit oversold, plus paying a dividend. That's not my style of investing, but it looks intriguing to me out there. So I'll be doing my homework this weekend, looking at a lot of stocks. We also had quadruple witching this Friday, so you see a lot of volatility on something like a Tesla. I was surprised to see Tesla's down 4%. All that came towards the last 30 minutes of the day, because it was up this morning and then it gave it all back, and that's because of people repositioning portfolios, not rolling over options. There was a lot of volatility intraday in the markets here. Nvidia was the complete opposite. It roared up towards the end, so that's kind of interesting. I'll be looking at some of these stocks to see what is some of the big money doing. What were they doing in the last 30 minutes of trade today, because that was a lot of the rebalance. The Qs paid a dividend this week as well. So a lot of house cleaning, getting funds ready for next year and to wrap up this year. But it was a pretty interesting week this week, and I'm looking forward to a calmer week next week. And I'm excited that there's a lot more diversified opinions now in the market. It's not just we're going up and away, new president coming in, everything's great. I like hearing, hey, look, maybe growth is going to be too hot, maybe, employment. I like hearing the bear side be a little bit more vocal, and they come out when the market's down 3% on the day, but I think it's healthy. The market needs to get checked every now and then, and that was the point for my earlier week video, saying, hey, look, I know everything's rainbows and lollipops, but we need a little bit of a shakeup, just to remind everybody, hey, stocks don't just go up. Be rational. Don't get crazy here. So I like that. I think it's an opportunity if we get more of this. I didn't really buy anything. I bought the dip on some crypto, just the big three: Bitcoin, Ethereum, and Solana. That's it. I got stopped out of my Coinbase stock. I will be looking to re-enter that position. For example, Coinbase had a big move this week. I don't know if I'll be re-entering at 300 or if I'll be re-entering at, got down to 255. Was that today? That was last night. Ooh, I missed that. So again, a lot of volatility, but I did get stopped out here. Nice profit. My initial purchase was around 210, and looks like I got stopped out around 277, right where it's at right now. So anyways, that's all I got for this market video. I don't think this was quite the buyable dip just yet. I will look for a little bit deeper retracement to really do anything aggressive, but I do think there's some opportunities out there to nibble, but I'm not doing anything crazy. I'm hoping for another big flush in the market sometime in the next 6 months. So I'll be waiting for that. So that's all I got for you guys. Have a great weekend, and Merry Christmas. I may not do a video until we get back from the new year. So peace out.